Hey guys, Britt here. Welcome to End Times Bible Prophecy. Make sure to hit the subscribe, like, and share buttons. Well, this crisis is unavoidable, and I would say irreversible. So this relates to the United States, and what we've been seeing lately is a lot of what I would call end of empire symptoms in regard to the United States. Porous borders, breakdown of society in many ways, heightened immorality. Of course, we've seen the Red Sea and what's going on there, and that has profound implications. But today we're going to look at one of those symptoms that is simply irreversible and unavoidable. And it will mean the end of the United States as the global superpower that we've come to know it as. And that has profound prophetic implications, because when you read Bible prophecy and you read about the events of the end times, whether it's Ezekiel 38:39 and the Gog of Magog war, or whether it is the 7-year tribulation, the United States as the superpower we've known since the end of World War II, it's not mentioned, it's not present, it's not a major player on the scene. So that means the United States and the role it enjoys in the world today and has for the past 100 years or so is going to diminish greatly. Its power will wane. There's going to be a number of reasons for that. I believe ultimately the rapture of the church will be the final nail in the coffin for U.S. superpower status. But we see all these other things as well. And the one we're going to talk about today is this right here. The national debt carried by the United States. So this is the Federal Reserve Bank of St. Louis. So this is their own numbers. As of the end of the fourth quarter, which is when this goes to, of 2023, it was a little bit over $34 trillion. But of course, that goes up probably as we're talking. It'll be higher before you even see this. But here's the debt clock. I don't know exactly how real time this is. As you can see, we've added, $630 plus billion since the beginning of the year. It's about $1 trillion every 100 days, guys, that we're adding to the national debt in the United States. This is simply, it's unsustainable. And the crisis that this will bring is unavoidable, regardless of what other people say, because there's really no way out of this without intense pain and suffering economically. So let's take a look at some more Federal Reserve Bank of St. Louis data. This is the interest on that debt. As you can see, it's pretty much going straight up. It's trending vertical. Let's put it that way. It's at the end of the fourth quarter. It was a little over $1 trillion per year, and that's actually going up at a rate of $100 billion every 4 months. We've talked about the interest rates being raised over the past 2 years, and of course that means that as this debt rolls over, and we're going to look at in a few minutes at a little bit more how that happens, but as that rolls over, it rolls over at higher rates, which leads to higher interest payments. Of course, that's going to cause some major problems, because that just adds more and more and more on there. So that's part of the reason we're seeing this go vertical here, is why we've been seeing the national debt going vertical. It's also the out of control spending, right? But let's take a look at this post from Wall Street Silver on X, formerly known as Twitter, right? I still tend to call it Twitter a lot, but it says, shock statistics. Mandatory spending in the U.S. budget, Social Security, Medicare, and Medicaid was $3,472 billion. Let me restate that. $3,742 billion in 2023. All government revenues were $4,439 billion. So mandatory spending was 84% of all tax revenue, meaning everything else in the budget, like defense, interest on the debt, everything else is mostly on borrowed money, meaning a budget deficit. That's why debt is growing $3 trillion per year. But then there's a follow-up tweet where they recognize the interest we were just talking about. But if we count interest on the debt as also mandatory spending, which we have to do, those four items, interest on the national debt, Social Security, Medicare, and Medicaid combined exceed 100% of all government revenues. Everything in the discretionary portion of the U.S. budget is now financed with borrowed money. All defense spending, foreign aid, FBI, DOJ, NASA, all federal agencies, every department in the U.S. government, and its spending is paid for by borrowed dollars now. And the trend is getting worse. Guys, and I want to add in there, on top of all of this, of what we're seeing, these massive budget deficits, we have what they, according to the government statistics, I'm just going by what they tell me, this low unemployment rate of 3.8%. Of course, they cover up, they don't count all these people that have dropped out of the workforce. They count part-time jobs. If you've got 3 part-time jobs just to barely be able to pay your rent and eat, well, then that's 3 jobs instead of 1. That's more jobs, right? So that's how they count all this stuff. But supposedly we have really low unemployment. We're in a time of relative peace and tranquility, right? We're not engaged in an active war with an adversary, although certainly we're spending plenty in Ukraine and elsewhere right now. But imagine what happens if we end up in a war or a major economic downturn. We tend to see deficits balloon during those time periods. And of course, every indication is we're on the cusp of both of those events happening in the very near future. So what happens when that takes place? So we'll talk about that in a minute, but let's cut to this other tweet here. This is from EJ Antoni. He says, the federal budget is on a collision course with Archimedes, ancient mathematician, for those who don't know. So it's on a collision course with basic math, right? So most of the spending is on autopilot and will continue to grow out of control, even if Congress cuts discretionary spending to the bone. Just follow up on what we just read. And don't think we can inflate our way out of this by devaluing the dollar much further. Much of that mandatory spending is indexed to inflation. And I agree with the first part of that. We cannot completely inflate our way out of this by devaluing the dollar, but it's not because mandatory spending is indexed to inflation, because as you know, the government lies, right? So, and they do that intentionally. So we hear the consumer price index, the CPI. They go, well, the CPI says inflation was 5% or 3% or whatever they say it is. And then Social Security might go up based on what many call the CP lie instead of the CPI. And so, yes, you may see Social Security go up 5% one year when there's inflation, but because the CPI says it was 5%, but in reality, it might have been 10, 15, 20% inflation. And anybody that's getting Social Security can tell you that's the truth over the last 4 years. Grocery prices are what? Up 50 to 100%, depending on what you're talking about buying. Social Security up 50 to 100% on payouts? No way. Because of the CP lie. They're lying about what true inflation is, and so then they go, we indexed it to inflation, so nothing to worry about here, right? If you're on Social Security, nothing to worry about. So they can, and they will try to inflate their way out of this by devaluing the dollar, but that causes its own problems. We'll talk about that in just a moment. But there's a follow-up to this from Ian Miles Chong, who says anyone can see the problem here. Certain programs that are untouchable, such as Social Security and Medicare, are squeezing out everything else. This is what will end the U.S. military empire and the U.S. dollar. And I would add, as well as what we're seeing in the Red Sea with our inability in the United States to project global naval power and open up the shipping lanes, make them safe for freely navigable international trade. All those things combined, we're seeing the petrodollar, this idea that oil will only be traded in dollars. We're seeing that come to an end, which decreases demand for dollars. So instead of making budget cuts, the US government will just print trillions of dollars to try to keep everything going. And I think the key word there is try. Guys, at some point they're going to fail. So as we talked about, we're in a time where it's relatively peaceful. Unemployment seems to be low. The economy is great, right? That's what we're being told. The economy is great. What happens when we see, when we see acknowledgement, when they can no longer avoid acknowledging that we're in a depression and huge economic downturn, or when we get into a war, or both, and the deficit spending starts to balloon because the government spending increases even more sharply than it has been. In the past, they count on, the COVID crisis or the great financial crisis, people rush to the safety, right? And put that in air quotes on purpose, the safety of U.S. treasuries and U.S. government debt, because we know the United States is good for it. And so that's a safe place to park your cash. And so when everybody rushes in to do that, interest rates will go down. Interest rates on the national debt will go down. Everything's going to be wonderful. But what happens if people look around and go, well, hold on here a second. You're already running $3 trillion deficits, but now you're going to run a $10 trillion deficit because of this economic downturn and these wars that you want to fight. I don't want to buy that U.S. debt. Instead, I think what I will get is, I think I'll go out and I will get the real safe asset, gold. I'm going to go out and buy gold, right? Or I'm going to buy something else of real value, some real asset. I'm not going to go out and buy this U.S. government debt. Yeah, I believe they'll pay it back by printing dollars and handing them over, but then where does my purchasing power go? I think I'll buy gold. And, that's where I will put my cash in. So then interest rates on that debt climb higher instead of going lower like they expect. And so let's look at this post right here from Craig Shapiro. He says, issuing more T-bills at an accelerating pace is a precondition to becoming a banana republic. This is the type of thing you see emerging markets do, not the issuer of the world's reserve currency and neutral reserve asset. I would say both of those are about to go away again. The dollar's link to oil is in the process of being severed. The ability of the United States to project conventional military deterrence on the high seas is gone. Both of those played a major role in seeing the dollar used in the bulk of international trade and being seen as the world's reserve currency. It's one of the reasons we see it as the neutral reserve asset, the relative safety of government bonds. This is in the process of being replaced by gold. We'll look at that in a second, but here's the graph he shows. So this blue line represents U.S. issuance of U.S. T-bills. This one is notes, and this one is bonds. So what does that mean? Well, these T-bills are debt that matures in less than a year. So it has different levels of maturity. Some of this, they'll issue it and they'll say, give us cash, give us dollars, and we'll pay you back in 3 months, or we'll pay you back in 6 months or 9 months. So all of this is due within a year, and then they roll it back over. All of the notes on this line are 2 to 10 year time frame maturities for that debt. And then bonds, as we see down here, is 20 to 30 years out. So this is one of the reasons we've been seeing the national debt, the interest on the national debt go up at the rate it is let's say in the past, some of these top 2 lines here, as they come due, they have to roll that debt back over at higher interest rates. And if they were smart, if they knew what they were doing, 4 years ago when interest rates were 1%, they would have issued longer duration debt. We would have seen this yellow line shoot up and the blue line shoot down. In fact, I think Austria actually did that. Austria at that time issued a 100-year bond, like 1%. So that's called, a well-run government, even if it's not really doing things in the best interest of the people that they're selling that debt to. I don't know who in their right mind would buy a 100-year bond at 1%, but that's what a well-run government would have attempted to do, is try to push that debt into the future so that they could inflate it away over time, not put it all at the front end here. So again, what happens when we have the next crisis and the deficit explodes and all of a sudden the interest rates double or triple from where they are now? Because again, we're at low rates now, relatively speaking, historically. What happens when it's much higher? Well, they're going to lose control of this whole situation. And I think there's signs right now that that's already happening. One of those is the price of gold. So this is a chart of the gold price over the past year. As you see, back in October, at the October lows, it was around $18.26 an ounce. Now we're up to $23.45. We've seen about a 15% rise in less than 2 months on the price of gold. So again, people are going to pursue the relative safety of something that can't be printed. Gold can't just be conjured out of thin air by the central bank. But the US dollar, that absolutely can be. We also see here, this is the 10-year US Treasury. So debt issued on a 10-year maturity at 4.4%. Again, what happens when this is 8% or 12% or 15%? Because as we've seen, this is looking back over a year. Let's go back a little bit further. This little bump right here where it hit a high of 4.09%, that was when we had the banking crisis, and we had the March 2023 banking crisis that led to the failure of the second, third, and fourth largest banks in U.S. history, right? And then we saw the rate rise again after that to around 5% in late October of 2023, and that's when we saw, well, there's some glitches in the banking system. Oh, there's a ransomware attack. Oh, somebody misplaced a hardware drive. It's no big deal. And all of these different excuses they gave for why these things were happening. And then rates went down and we can breathe again. Now they're back up to 4.4%, which is higher than they were during the banking crisis. I think we're on the verge of another banking crisis right now. But what happens if we see these rates go up to 5, 6, 8%? If we're already at a crisis in the 4% range, what do we end up with that? So there's no way around this, guys. They can try to inflate this away. And the reason I said this is irreversible at the beginning is this. Let's say the United States, and I know this is laughable, but let's say tomorrow Congress wakes up and says, this is unsustainable. what are we doing here? We need to cut back on spending. Well, as we've seen, there's only so much discretionary spending they can cut. But even if they said, you know what, anybody who is well off no longer gets Social Security, we're going to cut defense spending in half. Even if they did all of these things, that would have an impact on the economy. It would shrink the economy and it would shrink tax revenues as a result. And it would create a deflationary spiral similar to the Great Depression, and it would not solve the problem. But if they wake up tomorrow and say, well, we can't do that, let's print dollars, well, then you get inflation out of control. No matter what they do, this is an irreversible course of action leading to an unavoidable crisis, whether it comes this week or a year from now, 5 years from now, I don't know. But the math tells us that it's not far away. And this is a problem. And of course, the government says, oh no, everything's fine. All these people, I've heard all these excuses my whole life. This government debt doesn't matter. We owe it to ourselves. Or they'll give all these excuses for why it doesn't matter. And then, of course, we hear stuff like this from the Wall Street Journal last week. What's wrong with the economy? Well, it's you, not the data. Can you believe it? Many Americans believe the economy and their finances are worse than they really are. So, in other words, everything's fun and dandy. Guys, you're clueless as to how great things are, right? Everything's great. Inflation has stopped. That's what they tell us. And what they mean is, well, the rate of inflation has gone down. So the 5% reported inflation from a couple of years ago that was really 25. Well, now that's down to 3% reported inflation that's really 15. So what are you complaining about? Guys, it does not end well. Now, again, I don't think we're going to see a hyperinflationary crisis, as many people are saying, right now. I think that's coming in the future on the other side of the crisis we're about to see unfold. I think in the meantime, we're going to see deflation take hold, much akin to the Great Depression. And I think this is the key metric you need to keep your eyes on. We've talked about this before, when you see this go positive again, that's a signal the crisis has begun. So, guys, prepare accordingly. I'm going to do some videos, God willing, in the near future, talking about how to prepare properly for the things that are coming. Hopefully, I can get those done before all of the crisis is unfolding. I don't know. We're gonna see. But in the meantime, I've done videos in the past. If you've watched those, hopefully you've taken action based on those. But make sure you have a deep pantry so that you have access to food. Make sure that you have a water source that you can count on. Look at the vulnerabilities in your life in terms of shelter and security and income, and figure out what you can do to help fix those vulnerabilities, make those vulnerabilities better. Of course, the number one thing you can do is to know Jesus Christ and rely on him. So make sure you're doing that. Stay tuned for the other videos. Leave your comments below. Let me know what you think. In the meantime, God willing, I will see you on Wednesday. Bye. If you want to learn more about the end times and Bible prophecy, make sure to visit my Substack at brittgillette.substack.com. There you'll find my latest videos and articles, as well as notes, where I share the latest news headlines, the articles I'm reading, and the videos I'm watching. Subscribe for free, and each new post on Substack will be sent directly to your email. Just scroll to the bottom of the homepage and hit the subscribe button. As an added bonus, your first welcome email will include a link to a copy of my free ebook, 7 Signs of the End Times. Also, make sure to check out all of my books. Just look up Britt Gillette on Amazon, Barnes & Noble, Apple iBooks, Google Books, Kobo, or anywhere books are sold. Thanks for watching today, and until next time, keep your eyes fixed on Jesus, the author and perfecter of our faith.